Hey guys, this is Julie J. Trading Strategies. I want to show you a little trick that I'm going to be using going forward with my trading, and maybe this will help you manage your risk. One of the problems I'm having is adhering to a risk management plan. So I know how much risk I need to use, and I'll have good intentions, but I always deviate from my plan. I'm not adhering to it. And that is not the proper way to trade. So I want to, convince myself that you can use the smallest amount of risk if used properly, then we would have a chance at being able to be successful and maybe going through a funding company to help us reach our goal of becoming a prop funded trader. So here is a price oscillator on the chart on the bottom. And what this is, it's a standard NinjaTrader indicator. And what the price oscillator does is it measures the distance between a moving average and price. That's all it does. So when you first get the price oscillator on your chart in NinjaTrader, it comes with NinjaTrader. It's called the price oscillator. So if you put it on your platform, and I'll reset it, it has the MACD 1226.9, right? And it comes with a line and a zero line. And when you put it on your chart, it looks like this bottom thing, which it's sort of hard to read. You do get the measurement above and below zero, but it's extremely difficult to read. So how I do it is I change the settings. I first change that line to a bar. And so you would just go into the indicator and change the plot from a line to a bar. So that would be right here. Change it from a line to a bar. And then you can change your moving average that you want to measure price away from that moving average. And so this tells us that in a normal trading environment like today, price is about 10 points away from that 8 EMA, right? That's right here. So it gets about 10 points above or below that 8 EMA, and that is your profit target. So if you want to, the 8 EMA is used by a lot of traders because it's a line that's frequently hit in the trading session, and you can get a lot of trades off of it. So here was the open where we went up to the gap close, but it got very convoluted in here. But you'll notice that if you put your risk line, if we were going short, you never would have gotten a stop out, right? It never would have stopped you out if you moved the risk line to the moving average. And if you're going short, and how I, know to go long or short is if the close is below the 8 EMA. And hopefully the 8 EMA is above or below like a higher moving average, like the 50 or 200 or 100. Let me put this back a little bit. That's a 50. Move that back to the 100. And so we're 200. And you can see what I'm saying. The 8 is below that higher moving average. So you want to be looking for short trades. And so when the bar closes below the 8 EMA, your risk would be calculated from the 8 EMA up and the 8 EMA down for the profit target. So profit target reached. If you didn't get into this trade right here, and you waited for the next bar, profit target reached. So you can see that just walking it down, you would have had several profit target reached, and you never would have gotten a stop out until price crossed back above the 8 EMA, and you still wouldn't have gotten the stop out, but you probably would want to close your trade because it was a significant close, not just a touch close. So, something to think about. When volatility is larger, though, like in this was the FOMC meeting, Powell speaking, and it got really wild. I guess that was the Powell speech, not FOMC, but still it got really wild. It can get much wider. And so your risk widens every time the volatility increases. But in a normal operating environment, that 8 EMA 10-point range works pretty good. And it also can give you some ideas of maybe where to look for reversals. If you hit that 8 and you get a reversal bar, you may, think that it's going to go back to that upper band and then come back down, and that's what it does a lot. You see that it goes to the top and then comes back down. But so the 8 points and 25 point works really good on the 5-minute bar. So now we have a benchmark that we are going to be normal trading the 8 point away from the 8 EMA, but in high volatility, we're going to be expecting, 25 or higher. Looks like that was a lot higher right here. It went way up there, that big spike. But that's abnormal. Something must have happened that day, a big report. So realize that when you get into these big report situations, you're not trading in your 8 EMA 10-point range anymore. And you've got to make, accommodations for that. So, if you get to a place where you see that vol spike has gotten below your 25, that's where you might be looking to nibble to go back, RTM, turn it around if that's what you like to do. That one was really long, big spike down. But in a normal trading environment, this hopefully will help us adhere to a risk management system. On my PT indicator, you see that I show that a 5-minute range, the full range, the PT3, was 10.25 today. So I already knew that it was going to be a 10-point range, and I still kind of fubbed it up. So I've got to go back to the basics and start adhering to a strict protocol of managing my risk and profit targets according to volatility that I'm in, and knowing and understanding what that volatility range is likely to be from an excursion outside of a moving average. If you want to change the EMA to a 100 period or a 200 or a 50, you can do that. So if we wanted to move it to the 100 EMA instead to see how far it goes away from the 100 EMA, you can do the same thing. So you can get a ballpark picture of, where those outside ranges are likely to be, and manage your risk accordingly. So this looks like, let's just put uh, 35. There we go. So make sure we hit it. So once it hits 35, you might be looking for it to come back in. So you can just, do the eyeball test, like I call it. Go on your chart and eyeball to see where that 100 EMA gets to. On high vol, of course, your breaking ranges here. So you can see that it got above the normal 35. So that might signal that it might find some exhaustion. And looky here, it came all the way back in. And so did price, rolled all the way over. So put the price oscillator on the chart and let me show you if you're looking for a funding plan. Go over to, well, I have a tick chart. There's two things. Um, See how much risk you're allowed to trade with and how you determine that. The trader career path allows you to scale in to a program. So you can start with a small amount of risk. So your profit target is $1,500. They would like you to trade 15 days. And so if you put $1,500 over 15 days, that's $100 a day. That's minimal, right? Almost impossible with the E-mini to trade $100 because as we see here, that's 8 ticks. That's 2 points. And extremely difficult to manage risk successfully over 15 days with 2 points of risk. In fact, it's going to be damn near impossible. So you need to go to a micro account, right? And you can take that 2 points of risk and multiply it by 10, right? So 2 times 10 is 20. So here is 20 points. 20 points. And here, if you take the 20 points, you can divide it by 2. So here, I've brought us back into the 10-point range. See how I did that? Now we're back in our 10-point range. You just have to do it twice. And look how many opportunities once you get the EMA separating and sloping away from your other moving average and you get into that small trend situation. That's when you would want to consider approaching the market and trying for your 10 points and approach the market, something like that. But at least, and then you would do that in a micro account. Or you could just use the 20 points at one time and maybe take it from a higher moving average, but a pullback to a higher moving average. But however you decide to approach the market, I'm trying to show you that you can do this with NinjaTrader without any proprietary indicators. I have my proprietary indicators that I'm using, and I still mess up with if I don't adhere to a risk management plan. And it's something I have to face. I can't go in and discretionary trade anymore. I have to adhere to a risk management protocol. I would like to manage risk on a much higher scale, and I'd like to manage, a much larger book. So I've got to learn how to manage risk, and I have to conquer this. So I'm going to conquer it with you and stick to my plan. So I just wanted to let you know I'll be using levels and EMAs to put my risk on, but I'm definitely looking at the 5-minute 8 EMA chart because it works so well. Price hits it all the time. And like I said, when you get that slope away from a higher moving average, you can put your risk on the chart and, ride your slope and hopefully stay in that volatility and lower volatility environment that enables you to get the 10 points. Um, and if you get a stop out, um, that's fine. Not every trade is going to be a winner. Don't beat yourself up. You may have to, stop trading that session if you've, met your uh, risk management allotment for the day. Don't exceed it. Wait for the next day. Find a lower volatility environment to get engaged in. Wait for your slope. Don't try to enter in the initial balance. Wait for the market to make a move. And don't hesitate to engage the market at that time. So I think that if we, and here's a good example of it going long, um, stay above your 8 EMA and you should be able to come in and get 10 points. And here's the market analyzer to show us that it was in the 10 points. Well, actually, it got a little bit wider than 10, didn't it, right there? So stay within your allotment and your guidelines. So if it is a larger volatility environment, then you would want to just take one 20-point trade at a micro on that smaller account. So I'm just trying to show that it can be done with discipline. If you would like a copy of my tick table, just send me an email. I've got all the contracts. I've got the wheat, bean, corn, the fixed income, 30-year, and the NQ and the currencies with, I mean, just about every contract's in here. And I go from one contract all the way up, I think, to 15. Yeah. And so you can see by adding position size, once you get a profitable strategy, you don't have to change the strategy. You just add positions to it. So you take it from one contract to five. It's the same trade, but you're now trading for $500 for every, uh, 10 points. I think that was the NQ. It was a $5 contract, but you know what I'm trying to say. So you just add contracts. You don't change the strategy. And finding that successful recipe is, our goal. So let me take us back to the career path. So you start with the smallest evaluation, then you can go into a junior account, and that allows you to stay in the live sim environment while you get set up and start earning a paycheck before you start having to pay fees. Once you become a prop trader, you sign your contracts, you have to pay your fees up front, right? You have to pay your data fees. So that can be a little bit cost prohibitive for somebody just starting out. Or you can go right into the live account, pay your fees. It's basically the same thing. Once you complete this profit target of 25,000, then you can go to the next level, intermediate live, $2,000 profit target. Once you get that profit target, then you can go to the next level, the $3,500 profit target, and then you can go to the $200,000 account. If you start with the $50,000 account, trader career path, you have the opportunity to come up to a $400,000 senior live account, and the drawdown is fixed. So there's no more trailing drawdown. So that just means that you have a daily loss limit. And once you, start making profits, that drawdown does not, trail up behind you. So it it's once you have a lot of contracts that you can deploy at any one time. I think you have 20 or 30 contracts that you can throw in the market, if you would want to. But take your profit and upgrade. If you would like to sign up for this, just come over to my website, Jeopardy Trading Strategies, and I think there is a link here for the career path, and you can enroll here or find information about the plans, whether you want to get into a gauntlet or the trader career path. Take advantage of this 40% off and see if that works for you, and definitely consider putting the price oscillator on the chart. That helps us measure the volatility from the 8 EMA um, to the outward excursion before it comes back in. Let me take these off so we can just see the 8. The 10 point, I mean. I was looking at that and saying, that's a lot more than 8 EMA. Um, Let me put this back from 100 to 8 and it'll pop back. So that was from the 100. I was like looking at that saying, oh, that doesn't look right. So here's our 8 EMA, our 10 points, and that is my lane that I want to stay in on this lower vol. And there's plenty of opportunity to trade in this framework. And I'm going to be planning to take advantage of that with the smaller risk for the smaller trader pass. Once you elevate your risk, if you get a larger account, then of course you can take your risk to the higher levels and understand that you're going to be in a higher volatility level, and maybe you can take advantage of trading a report that comes out, and you'll know what to do with that extra room. So here's a 30-30. And you can see here that 8 EMA didn't quite get up to the 30, but so that looks like it stays inside 30-30 a lot. So you know that 30 points with an 8 EMA, it pretty much stays in there. It looks like it slipped under just a little bit right here. Where did it go? There it went. So uh, that's when you could come in here and say it got way under the 30. So, I mean, it got way so that's oversold. And you would definitely maybe want to be consider hitting a reversal back to the mean, something like that. But price oscillator, change your EMA. Make sure you're on the right EMA. If you change it to a 100, make sure you change it back if you're going to be trading it on an 8. And I do like the 8 EMA for this, uh, especially for a 5-minute bar. And that's a pretty good bar size to trade with the E-mini. Pretty standard. All right. Thank you guys. Let me know if you have any questions, and then just let me know if you like that tick chart. I'll send you a copy. It's just an Excel spreadsheet. I'll be glad to get that over to you. And do sign up for the Earn2Trade Trader Career Path while they have that special going on. Let me know if you have any questions. Thank you.